The Honest Truth.
Met Benito Vergatini.
Smile 90.4 FM.
Joining us this evening to elaborate into how exactly SARS is enforcing crypto tax compliance is Director at Ibex Consulting, a division of Latita Africa, Thomas Lobban. Mr. Lobban, good evening. Thank you so much for joining us tonight.
Hi, Benito. Thank you. Good to be here.
SARS has launched a dedicated crypto tax unit. Why have they done this?
Well, there could be many reasons. Most are of the impression that crypto, or correctly under the impression that crypto has been a big area of non-compliance by taxpayers, but it's now believed, at least by those who are a little bit more informed, that the thrust of this comes from South Africa's grey listing status, and dealing with crypto compliance, including from a tax perspective, is an absolute necessity to get out of that bad status.
I see. And what specific compliance requirements do crypto traders and investors need to be aware of?
Well, the two big ones are tax and exchange control. Now, exchange control can be a whole discussion in and of itself, but the focus here is on the tax. You see, if you're transacting in crypto, whether it's earning crypto interest or staking rewards, as people may do, or swapping crypto for money or crypto for crypto, you need to declare this in your tax returns. So this is really what SARS is cracking down on.
And is there a tax obligation? I mean, or rather, what is the tax obligation for these crypto transactions, Thomas?
It's really difficult to say for somebody who isn't fully informed on tax. You see, the big differentiator here is whether you sell these assets or dispose of them as capital or as income. And the difference really is capital is more passive, longer term, whereas income arises where you're trading. And income or capital, your gains or your losses, you need to track that with each transaction. And that, of course, will boil down to your return at the end of the year.
Right. Okay. So how extensive then is SARS new crypto tax unit's purview in terms of tracking and auditing crypto transactions?
Well, really, this is something that surprised me recently. We've all known of late that there has been a crypto unit that was formed at SARS. Last year, SARS started sending letters of notification to taxpayers, basically saying, we're aware of the fact that you've transacted in crypto, and we are asking that you catch up on your disclosures. And if need be, please use the voluntary disclosure program, SARS's amnesty program, to fix up your affairs. But now recently, taxpayers are receiving notification of revised assessments, which is where SARS is telling them, we are going to be raising additional tax against you because we believe that you either didn't declare your crypto transactions adequately or properly or at all in your returns. So this is now what's happening. And the where they're getting this information from is even more interesting. You see, SARS is very empowered as far as investigation and enforcement goes. So they're freely getting this information from crypto exchanges, presumably just in South Africa. But from an audit perspective, SARS is now also able to trace transactions on the blockchain. And as far as identifying which taxpayers to go for, that's a bigger project. And that's where I suspect SARS is leveraging on AI to compare what they receive information-wise compared to the returns.
Okay, so they do have access to local and international crypto exchanges. How far back can the unit go in terms of auditing past transactions, Thomas?
That's a tough thing for people to hear, but when it comes to non-compliance and tax due, SARS is not really hamstrung as far as how far back they can go.
Wow.
But when SARS audits you, you'll find that they generally go back 5 years and start from there.
Thomas Lobban, Director at Ibex Consulting, a division of Latita Africa, joining us in conversation this evening, just elaborating on how SARS is enforcing crypto tax compliance and how we should respond to this to avoid falling foul of SARS. You're welcome to share your thoughts on 0829 904 904. So how should we respond if we do receive a letter from SARS regarding crypto holdings, crypto transactions, Thomas?
Step one, act immediately. You see, when you get correspondence of this nature with SARS, whether it's the warning letters last year or now the notification of revised assessments from SARS's risk audit division, you have deadlines that you need to adhere to. And SARS will, in the letter, tell you what that deadline is. And whether you think you're compliant or not, you really should go to your tax advisor, preferably somebody who's clued up on crypto, and get them to investigate, one, whether you are indeed compliant or there may be gaps in your history, and then two, how to respond to the SARS letter. Because one thing that absolutely will not work is ignoring it. And I can give you an example. In my most recent case, the matter in which I had a meeting with the crypto unit at SARS, they have record of his transactions and they look at all of the gains he made, but they don't look at his expenses along the way. So they were about to raise tax on an amount far higher than he should have, which SARS, again, because of the rules of the Tax Administration Act, they're empowered to do. So really, you need to act quick. You need to seek counsel from your advisor, and you need to prepare your response to SARS within that deadline that they give you.
Further to that, what specific documentation information does SARS require from taxpayers during these sorts of audits?
Now, finally, we have a little bit more clarity from SARS on the matter. And this was a big topic of discussion in that meeting. You see, what SARS likes to see is, yes, a lot of taxpayers will get your generic crypto tax report, which you can get online or from an advisor. But SARS wants to go a level deeper. They want to see your transaction history directly from each exchange and reflecting each of your crypto wallet IDs or identification codes for each wallet, so that they can go themselves and trace those transactions back to verify what you've provided to them. Unfortunately, SARS doesn't know until they do that whether you have manipulated the documents you give them. And then an alternative to the wallet IDs, crypto wallet IDs, is if you can give a PDF statement from the relevant exchange, which unfortunately you'll only find from South African exchanges, whereas most crypto investment happens worldwide.
Director at Ibex Consulting, a division of Latita Africa, Thomas Lobban, joining us this evening on SmileFM. Share your thoughts as we're putting the spotlight on SARS' new crypto tax units, 0829 904 904. What are the consequences of failing to disclose cryptocurrency transactions, Thomas?
Well, those implications can become very daunting. Technically, taxpayers can be prosecuted, resulting in a fine, or depending on the seriousness of the offense, imprisonment for up to either 2 years or for more serious offenses up to 5 years. However, what you'll mostly see in practice, because SARS, of course, doesn't want to refer every non-compliant taxpayer for prosecution, you'll generally see penalties and interest on the outstanding amount. But those penalties can really make a situation go from bad to so much worse. In this example that I've had most recently from SARS Crypto Unit, the risk audit unit, they wanted to raise penalties of 100% of the outstanding taxes that they believed were due. Wow. Which speaks to gross negligence from a SARS perspective on behalf of the taxpayer. So they really are seeking to punish and deter non-compliance in this space.
Why are they coming down so hard on this? Is it as a result of what you had mentioned earlier around the grey listing, and this is one means to address it, I suppose also keeping in line with global regulation?
We at Ibex truly believe that it does come mainly from the grey listing impetus. However, if you think about this from a tax administration perspective, of course, it's an area of big concern for a revenue authority like SARS. So I think it's a general tax compliance imperative, but also the grey listing issue.
Are small-scale crypto investors and traders at the same risk of audits as large-scale traders and investors?
Well, if you're speeding, or if you go through a roadblock and you've been drinking, it doesn't matter if you're in a Toyota Taz or a Ferrari California, you're still committing a crime. From a SARS priority perspective, of course, larger liabilities would be pursued first. But in this particular case, the taxpayer honestly wasn't alleged to be owing that much to SARS. So I would say it's difficult to say, but at the risk of sounding like I'm fear-mongering, if you're non-compliant, it doesn't matter what the extent of it is. You probably shouldn't feel too comfortable.
Yeah. Some taxpayers who have disclosed that their crypto assets are still being audited. Is this any indication of the SARS audit process?
Well, again, in this particular case, this letter was delivered to a taxpayer that back in December had already submitted a corrected return to make sure that their crypto was included. They learned that this was necessary quite recently, believe it or not, and so the correction was done. But at the time that this letter, which was the first notice from SARS, there was no warning. By the time this letter was issued, that return had been submitted, and the supporting documents around it had already been given to SARS, and it's still pending as we speak. However, the risk audit department at SARS is a completely separate unit from those who deal with the tax returns and the verifications on them. So they will override. And if they learn that there are supporting documents that have been provided alongside a return, they can either cancel that verification and you deal with them exclusively, or they pull that over to themselves and they look at that. So again, they have the discretion to determine whether they will audit you or not, regardless of what your current situation is with SARS.
It definitely sounds like you can't go into this alone as a single as a solitary taxpayer. You need to have some sort of tax assistance and a tax acumen to help you along here, Thomas.
Look, you absolutely can deal with this on your own. It would be dishonest to say otherwise, but at the same time, an attorney who represents himself has a fool for a client, they say. It's probably best advised that you seek counsel from somebody who knows what they're doing and has a good degree of experience in the space, yes.
Thomas, lastly, so how can crypto investors and traders ensure compliance and then protect themselves from unexpected tax liabilities?
Well, generally you have two routes that you can go, and it starts with recognizing whether you may or may not be compliant. If you think that there's a possibility that you're not fully compliant, you either start working with one of these online calculation tools, which again do require some degree of tax knowledge to use properly. Or you can see an advisor who knows what documents to ask, who knows how far back to go, generally as far back as your first transaction, and you move forward from there. You calculate what the result is for each year, and you compare that to your returns, and you come up with a plan of action about what to do in those returns. And there obviously is a bouquet of options available to you depending on the situation to correct the past.
Director at Ibex Consulting, a division of Latita Africa, Thomas Lobban. Thomas, appreciate your insights and time. Thank you. Thank you for joining us tonight.
Thank you so much, Benito. It was great to be here.
Smile.
It's pretty amazing.
90.4 FM.
Sure, that sounds quite odorous at least.